Assalamualaikum everyone. In this video, we will present segmental reporting and interim report of Media Prima Berhad. Before that, let us introduce ourselves.
Hi, my name is Muhammad FIQRI bin KADARUDDIN. I am one of the accounts executive of the company.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is THAQIF bin KAMARUL BAHARIN. I am from AC2204C. And today I am as an accountant executive gonna present the detail about our segment reporting and our interim report.
Assalamualaikum and hi. My name is Fatihah Muliani binti AZIZ MAULANA and I'm one of the company's account executive.
Assalamualaikum. My name is HUSNA KHAIRINA binti HASHIM. I am one of the executive account of the company.
Welcome and hi, my name is Muhammad HAFIZ FIQRI and I'm an account executive of Media Prima Berhad.
Now, let's take a look at company background of Media Prima Berhad. Media Prima Berhad is Malaysia's leading fully integrated with media company with a complete collection of media-related business in television, print, radio, out-of-home advertising, content creation, and digital media based in Petaling Jaya. Media Prima is also the owner of the New Straits Times Press Malaysia Berhad. There are three types of national brand of the largest publisher in Malaysia, which is New Straits Times, Berita Harian, and Harian Metro. Besides that, Media Prima also owns a film studio which is Prima Studio, which is involved in film, marketing, and animation. For radio network, they have 4 broadcast boards, which is Fly FM, Hot FM, Cool FM, and 1FM. Last but not least, Media Prima also owns 4 television channels, which is TV3, ATV, NTV7, and TV9.
I'm going to present the management approach. First is the factors of having segmental report. There are 3 factors of having segmental report, which is first is the nature of the business activity, which is company may produce report which is business activity are presented in a variety of ways. This factor may identify a single set of components as constituting an entity's operating segments. As we know, Media Prima Berhad engage in a complete set services of media-related businesses. For example, Omnia, which is advertising, and also broadcasting, outdoor media, print media, digital media, content creation, home shopping, and also corporate. Next factor is the existence of manager responsible for them. This is important because the existence of segment manager is actually directly accountable to and maintain regular contact with the chief of decision maker. Manager is important to discuss operating activities, forecasts, financial results, or plan for the segments. Furthermore, segment manager identify as a function which is not necessarily a manager with a specific title. The chief operating decision maker can also maybe the segment manager for some operating segment. Some managers are responsible for different product and services line. The next factor is information presented to the board of directors, which is the company must have a sufficient amount of information that need to be presented to the board of directors to review. Operating segment can be determined based on the reports reviewed by the senior management and board of directors of the company. This information is also include of sales, revenue, expenses, profit or loss, asset, and also liability. Next is the type of segment. There are 2 types of segment, which is business segment and geographical segment. Business segment is when the company risks and rates of returns are affected predominantly by the differences in product and services, whereby geographical segment is when the company risks and rates of returns are affected predominantly by the fact that it operates in different countries or other geographical areas. As we know, Media Prima Berhad segment is operate on business segment. For example, Omnia on advertising, and also they have broadcasting on television network, and also outdoor media, print media, content creation, digital media, and also home shopping network, and they also operate on corporate. This shown that the company mainly operates on business segment. Furthermore, Media Prima Berhad did not have any geographical segment because they did not operate on different countries or other geographical areas. Next is the Chief of Decision Making and its responsibility. We must know about the meaning of Chief Decision Making. Chief of Decision Making is the person that is responsible for making strategic decisions about the entity segment. Furthermore, the Chief of Decision Making is a function and not necessarily a person. Chief of Decision Making can also be the Chief Executive Officer, which is the CEO, and it can also be the Chief Operating Officer, which is the COO, and it also can be the Senior Management Team, or even the Board of Directors can act as the Chief of Decision Making. Next is the Chief of Decision Making of Media Prima Berhad. As we know, the Chief of Decision Making of Media Prima Berhad is Board of Directors and also the Senior Management Team, which is Dato Iskandar Mizal bin Mahmud, who is actually act as the Group Managing Director. Next is the responsibility of Chief of Decision Making. The responsibility is to allocate resources and to assess the performance of the various operating segments in the company. Next is to make the strategic decision based on the reporting statement. Next is also to devising an appropriate strategy that ensuring it is implemented effectively. And lastly, it also coordinating all the activities in every functional operating segment.
There are 6 steps to identify the non-reportable and reportable segments. Firstly is to identify all operating segments. An operating segment is a component if an entity engaged in a business activities where they earn revenue and incur expenses, whose operating results are regularly reviewed by Chief Operating Decision Maker, for which the financial statement that is discrete is available. MFRS allow entity to aggregate similar operating segments if they meet the following criteria. Aggregation is consistent with the core principle of the MFRS 8. The segment have a similar economic characteristics, and thirdly is that it is similar in nature of products, services, production process, the type of customer, and the method distribution used, and if applicable, nature of regulatory environment. Thirdly is to report the operating information separately. So for reporting purposes, a reportable segment is one that meets any of the following quantitative threshold. So there are 3, that is revenue. Secondly is the profit or results. Thirdly is the assets. So firstly is revenue. A reported revenue from sales to external customer and internal segment sales is 10 or more percentage of revenue combined. As for the profit, the absolute amount of the segments reported profit or loss is 10% or more of the combined reported profit or loss of all segments reporting profit or loss. Finally is the assets. So the assets segments are 10% or more of the total asset from the operating segment. Fourthly is to evaluate operating segments for aggregation. So the operating segment that does not meet any of the quantitative threshold, an entity shall combine 2 or more operating segments to produce the reportable segments. As for the 5th steps, it is to apply the 75% rule. So if the total external revenue is less than 75% of the entity's revenue, and the additional operating segments will be identified for reportable segments until 75% or more of the revenue is included. The final steps to identify the non-reportable and reportable segments is to aggregate the remaining operating segments. So all of the information for non-reportable segments shall combine and disclose in all other segments category separately. and the sources of revenue should be described as part of the disclosure.
Now I will talk about segment information of Media Prima Sdn Bhd. For Media Prima Sdn Bhd, there are 8 segments in the segment information. The segment are Omnia, Broadcasting, Outdoor Media, Print Media, Content Creation, Digital Media, Home Shopping, and lastly Corporate. In order to locate the reportable segment of Media Prima, our team used 10% threshold test on revenue basis, which include the external revenue and inter-segment revenue. The total revenue of RM 1,522,469,000 will be the basis of divided with each of segment to find the segment that is 10% and higher to be reported as reportable segment. Firstly, we have Omnia with total revenue of RM 388,032,000 ringgit divided with RM 1,522,469,000. We will get 25.49% and the percentage is higher than 10% to be reported as reportable segment. Secondly, for the broadcasting, the total revenue is RM 348,240,000 divided with the basic revenue and we will get 22.87%, which will be considered as reportable segment. Thirdly, outdoor media is not considered as reportable segment as the percentage of it is below 10% at 7.43% after dividing the total revenue of RM 113,190,000 ringgit with RM 1,522,469,000 ringgit. Moving to the fourth segment, Print Media is considered as reportable segment as it meet the requirement of 10% threshold after dividing the total revenue of RM 149,601,000 ringgit with RM 1,522,469,000. Next, both content creation and digital media are not reportable segment as both segment percentage is below 10% at 4.29% and 5.92%. Lastly, as for home shopping, the percentage is reported at 20.29% and is considered as a reportable segment, while corporate percentage of revenue is at 3.88% and did not meet the requirement to be reported as reportable segment. As conclusion of 10% threshold test, Omnia, Broadcasting, Print Media and Home Shopping are 4 reportable segment of Media Prima Sdn Bhd, while outdoor media, content creation, digital media and corporate are non-reportable segment. Moving on to the next part, we have 75% rule, whereas the total combined of reportable segment external revenue must be above 75% to be remain as reportable segment, or otherwise it will require additional other operating segment to be identified as reportable segment. The total external revenue of each reportable segment are RM 856,630,000 ringgit divided by total revenue of RM 1,041,565,000 ringgit and multiplied by 100%. The percentage is 82.24%, which is higher than 75%. Hence, the reportable segment chosen will be remain as reportable segment. Dear shareholders, right now I'm going to present the new segmental report based on the reportable segment. First, I will explain about Omnia segmental report. The total revenue is RM 388,032,000 ringgit as it was contributed by external revenue. For the year 31st December 2020, Omnia recorded LBITDA at RM 10,998,000 ringgit. There are no depreciation and amortization, impairment loss and also charge or net reversal of termination benefit. The finance income for Omnia is at RM 19,000 ringgit, whereas Omnia did not occur any finance cost and share of result of associate. The taxation for Omnia is recorded at RM 1,120,000 ringgit. Therefore, the final amount of reportable segment is at loss of RM 12,099,000 ringgit. Second, the total revenue of broadcasting is at RM 348,240,000 ringgit after adding both external revenue of RM 74,604,000 ringgit and intersegment revenue of RM 273,636,000 ringgit. For the current year, broadcasting occurred royalties at RM 964,000 ringgit. Broadcasting segment report positive EBITDA at RM 67,018,000 ringgit, while the depreciation and amortization charge is at RM 29,074,000 ringgit. There is no charge for impairment loss and the net reversal of termination benefit recorded at RM 1,789,000 ringgit. The finance income is at RM 1,633,000 ringgit, while the finance cost is at RM 2,372,000 ringgit. There is no share of result of association and taxation for broadcasting is at RM 2,978,000 ringgit. The reportable segment of broadcasting is recorded at profit of RM 36,016,000 ringgit. Third, Premedia total revenue of RM 149,601,000 ringgit is from external revenue of RM 85,112,000 ringgit, plus with intersegment revenue of RM 64,489,000 ringgit. Premedia record LBITDA at RM 3,714,000 ringgit with depreciation and amortization charge at RM 25,792,000 ringgit. There is no impairment loss charge, and Premedia segment recorded net reversal of terminations benefit at RM 831,000 ringgit. The finance income is recorded at RM 6,748,000 ringgit, while finance cost is at RM 4,570,000 ringgit. Share of result of associate is none, and taxation is at RM 181,000 ringgit. The reportable segment for Premedia is recorded at a loss of RM 26,678,000 ringgit. Lastly, the fourth reportable segment, home shopping, recorded total revenue of RM 308,865,000 ringgit. From external revenue, home shopping managed to record EBITDA for the year at RM 10,738,000 ringgit. The depreciation and amortization for the segment is at RM 1,340,000 ringgit, whereas the impairment loss and reversal of termination benefit are none. Funding income is recorded at RM 971,000 ringgit, while funding cost and share of result of associate are none. The taxation for the segment is at RM 150,000 ringgit, and home shopping record profit at RM 10,219,000 ringgit. Moving to the other segment, this segment consists of outdoor media, content creation, digital media, and corporate. The total revenue is RM 327,731,000 ringgit, was added from external revenue of RM 184,952,000 ringgit and intersegment revenue of RM 142,709,000 ringgit. Other segment record EBITDA at RM 85,660,000 ringgit and the depreciation and amortization charge at RM 56,609,000 ringgit. The impairment loss is at RM 44,448,000 ringgit, while the reversal charge of termination benefit is at RM 60,298,000 ringgit. The finance income is at RM 3,868,000 ringgit, and the finance cost is at RM 40,245,000 ringgit. Share of result of associate are at 151,000 ringgit, and the taxation is at RM 7,888,000 ringgit. The other segment record a loss of RM 50,111,000 ringgit. For the consolidation adjustment or animation, the total revenue is negative at RM 480,904,000 ringgit. Media Prima recorded LBITDA at RM 19,832,000 ringgit. For the depreciation and amortization, the amount is at RM 67,000 ringgit, while impairment loss is at positive RM 44,448,000 ringgit, and there is no net reversal of charge of termination benefits. Finance income is negative at RM 6,535,000 ringgit, while finance cost is positive at RM 6,535,000 ringgit. There is no share of result of associate, and the taxation is at RM 80,000 ringgit. The reportable profit is at RM 24,567,000 ringgit.
Now we move to the conclusion of the segment reporting, which is the advantages and disadvantages of segment reporting. So for the first of all, I'm going to present about the advantage of segment reporting. The first advantage of segment reporting is transparency. What is transparency? Transparency is accessible and properly disclosed, especially for the financial information. Segment reporting can identify which portion of business is more profitable. So this transparency, we could get more detail of information for every portion of business. The second advantages of segment reporting is it may help in decision making for a firm to plan any expansion or diversifications. So this segment reporting clearly perceive a performance of every business segment. So a firm can plan to do any enhancement in any business segment to enhance their sales. The third advantages of segment reporting is it improve context. This is because it allows the stakeholder a better understanding of the swing that may affect overall earning. Segment reporting may help media Prima Sendirian Berhad through displaying the sources of the earnings and also help the stakeholder to determine whether the earnings are sustainable or not. It may also help investor to understand better about the business and its potential cash flow. Next, I'm going to present about the disadvantages of segment reporting. Segment reporting have few disadvantages, which is first of all its prominence in the present, which it places more focuses on the short-term number, as if media Prima Sendirian Berhad develop a segment that run a big deficit before the necessary personnel and infrastructure are in place. The losses sustained will be mitigated by the company overall performance, which resulting in a negative financial statement image. Okay, for the next disadvantages is the limitation of segment reporting is data manipulation. The data in the segment reporting can be altered and reported in the way what debt management wants the user to see it. As a result, the user of financial statement will have a distorted perception of company performance. For example, in order for the BOD to deceive the losses may be grouped with an unrelated profitable business, you need to present and better picture of performance.
Next, we move on to part B, which is interim report. First is the basis of preparation of the interim report. Media Prima Berhad use integral method in preparing their company interim report, since interim report is the fraction of its annual report. We know that the company prepare report every 3 months for 4 quarters annually. The unaudited interim financial statement have been prepared in accordance with MFRS 134 Interim Financial Reporting and paragraph 9.22 of the listing requirements of Bursa Malaysia Securities Berhad. The unaudited interim financial statement should be read in conjunction with the audited annual financial statement of the group for the financial year ended 31 December 2019, which were prepared in compliance with Malaysian Financial Reporting Standard MFRS, International Financial Reporting Standard IFRS, and also the requirements of the Company Act 2016 in Malaysia.
So the accounting policies used by the company is MFRS 16 and MFRS 101. MFRS 16 is COVID-19 related rent concession using practical expedient. As at 31 December 2020, the practical expedient had resulted in 9 million ringgit reduction lease liabilities as a result of lesser waivers on lease payment. As for MFRS 101, it requires the company to prepare the financial statement in accordance to MFRS to also make an explicit and unreserved statement compliance with IFRS.
There are 3 types of interim report: quarterly, issued by the company 4 times a year; bi-monthly, issued by the company 6 times a year; and semi-annually, issued by the company twice a year. And the company prepared the interim report quarterly. We analysis the interim financial report of 4th quarter ended of 31st December 2020.
Hi, we meet again. Now, I'm going to explain about period for the current and comparative of each statement of Media Prima Sendirian Berhad. Media Prima Sendirian Berhad financial year end is 31st December and publish quarterly financial report. Current year end on 31st December 2020. The preceding financial year is from 1st January 2019 to 31st December 2019, and the current financial year is from 1st January 2020 to 31st December 2020. Next, I'm going to explain about Media Prima interim financial statement for the 4th quarter of 2020 from September to December 2020. Firstly, for the statement of financial position, the current interim report is at 31st December 2020 and the comparative one is at 31st December 2019. This is because statement of financial position is a half yearly. Since interim report chosen is the 4th quarter, we can compare with the second half yearly. Secondly, statement of profit or loss and statement of comprehensive income, current 3-month interim report for the 4th quarter is from 30th September 2020 to 31st December 2020, and the cumulative 12 month is from 1st January 2020 to to 31st December 2020. The comparative statement of profit or loss and statement of comprehensive income for the current 3 months from 30th September 2019 to 31st December 2019, while the cumulative comparative is from 1st January 2019 to 31st December 2019. Thirdly, for the statement of cash flow, the current interim report for 12 months is from 1st January 2020 to 31st December 2020, while the comparative financial year end is from 1st January 2019 to 31st December 2019. Lastly, the fourth statement is statement of changes in equity. Statement of changes in equity current interim report for 12 months is from 1st January 2020 to 31st December 2020, and the comparative for statement of changes in equity is from 1st January 2019 to 31st December 2019.
Next, we move on to the last part of our interim report, which is the adjustment made by our company. So for the adjustment one, as we can see here, the adjustment is the cost of inventories as at 31 December 2020 is 24,097,000. Meanwhile, the net realizable value of the inventory is 23,867,000 as at 31 December 2020. So the value of inventory is equal to the lower either the cost or the net realizable value. So at this situation, we can see that the net realizable value is more lower than the cost, which is 23,867,000. So the value of inventory as at 31 December 2020 is equal to 23,867,000 ringgit. Next adjustment that made by our company, as we can see here, okay, Media Prima Sdn Bhd bought a new van for their television network amounting 100,000 ringgit on 30 September 2020. The van has the useful life of 10 years and it will be depreciated using straight line method on monthly basis. So how we going to calculate it? For the first one, we're going to calculate the depreciation, which is 100,000 ringgit times 3 over 120, which is 3 months over 120 months, equal to 2,500 ringgit. Next, we're going to calculate the current value of the van as at 31 December 2020. So how we going to calculate? The 100,000 ringgit, we're going to deduct with the 2,500 ringgit, which is the depreciation, and we're going to get the current value of the van as at 31 December 2020, which is equal to 97,500 ringgit. Next, I'm going to show you the extract of statement of financial positions for Media Prima Sdn Bhd as at 31 December 2020 before the adjustments. As we can see here, the extract of statement of financial positions. So for the first one is the non-current asset, which is the property, plants, equipment, is equal to 210,396,000 as at 31 December 2020. Next is for the current asset is the inventories is equal to 24,097,000. Next, I'm going to show you the extract of statement of financial position for the Media Prima Sdn Bhd as at 31 December 2020 after the adjustment. As we can see here, the non-current asset, which is the property, plant, equipments, the amount has changed, which is 210,493,500. For the current asset, which is the inventories, it has changed to 23,867,000.